Hey, everybody, welcome back to another great edition of the Best Ever CRE Show. And this is the Multifamily Mastery Show hosted by your guy, John Casman. I'm excited to be here today. We've got a great guest. We're talking to Ken G. Ken, welcome to the show. Why don't you give our listeners a little bit about your background? Take 2 minutes and tell us about yourself.
Yeah, I grew up in Toledo, Ohio. Got my undergraduate from the University of Toledo. Then I moved to Cleveland, where I became a commercial lender for 5 years. And it was then when I was being a lender, I went to school at night at Case Western Reserve University, small private school in Cleveland, and it prepared me to be a CPA. So I went from there, went from the bank. I left the bank after 5 years of commercial lending, went to a company called Deloitte, one of the big firms, and spent 7 years there as a CPA on the tax side of the business. Doing tons of, if you could do fun stuff as a CPA, a lot of the merger and acquisition work, a lot of private equity work, a lot of all kinds of stuff, tax planning, really the fun stuff. But it was there that I realized that, well, what actually happened is I used to do my daughter, this is like 27 years ago. I used to do my daughter's middle of the night feeding at 3 a.m., right? She was just born, pool time, me and her, everybody's sleeping. Wife needed a break, and 3 a.m. was a good time to bond with your daughter. If you have kids, you know what I'm talking about, especially if you have a daughter. She got that little finger thing. She got you wrapped around her little finger, and it worked, right? I developed a great relationship with her until one night I realized, actually it was over a few nights, like it's 3 a.m., Ken, and this is the best you can do for your daughter. Because if you don't know anything about CPAs, they work really, really hard. And so 80 hours a week, 3 a.m. is the best I could do. And it made me realize, wait a minute, man, you think you did everything right. You went to school, got good grades, got a good job. And here you are. The best you can do for your family is 3 a.m. Not cool. And so what happened is for the 5 years I was at the bank, all my clients were in real estate and making a lot of money. Then I went to Deloitte. They had one of the biggest real estate practices in the country with people. If I told you who my clients were, you would know their names. Absolutely. So I was around all these people making a ton of money in real estate and not working nearly as hard as I was. So I said, you know what, I got to figure this thing out. And took me a long time back then. There was nothing like this podcast, nothing. So I went to apartment association meetings, tried to network with the person who presented that day. And it was just really hard to learn this stuff. Got enough guts. I bought a 28 unit, a 24 unit, and a 22 unit. Sold them all 3 years later, made $500,000 and realized, oh my God, what did I just do? And, imagine back then having $500,000 sitting in my bank account all at one time was just like ridiculous. I just couldn't believe it. So I stuck with it. I had to figure it out. I spent another year and a half at Deloitte just because I wanted to make sure, and left Deloitte and never looked back. And I've been doing multifamily
I love it,
ever
man.
since.
You talked about those 3 a.m. feedings and asking yourself, is this the best I can do for my family, especially my daughter? And I know that's a reality that, in the corporate world, we kind of just have this mentality to grind it out and climb the corporate ladder and make these sacrifices. And listen, we know success requires sacrifice. However, we also have to ask ourselves at what cost. And it sounds like you started going through that process, realizing, man, I got this young daughter and the best I can do is start spending time with her is 3 a.m. when everybody else is even asleep, right? So that kind of made you realize, hey, all these guys I'm working with, all of my clients in the banking world, they're all doing real estate. They don't seem to be working quite as hard as I'm working. You go to Deloitte and same kind of thing happens. Right. And you try to figure it out, and like you said, back then, certainly a different game. You had to physically be in places where you had to go get books and read the books. If you want to reach out to the author of that book, you had to write a letter, right? You couldn't even email them a lot of times. So just a whole different process. Yep. But you were able to learn. And from there, you took action. And I think that's the key thing here. You took action on that journey, buying that 28 unit, buying that 24 unit, buying the other property, selling them, making $500,000, and then launching yourself into this space. If you could go back to talk to young Ken, right? That Ken who's doing those 3 a.m. feedings, the person who's listening to this podcast right now at 3 a.m., right? Or sometime late night or early day, but not doing the things you want to be doing, right? You're grinding this out. What advice would you give to young Ken or that person who's listening who wants to get started on their journey, but maybe having a hard time pulling the trigger?
Yeah. So what I find talking to people trying to figure it out now is they have this belief thing, right? They're like, man, I apartment building and I can't own an apartment. Like, no, I don't have any money. right? They stop themselves. And I almost did that back then. I don't know. I wish I could really remind myself, what is it that made me keep moving? Maybe it was, the fact that on that first deal, I hired an attorney, paid him $3,000. He owned 4,000 units because I needed validation. I needed him to tell me, yeah, you're not going to get killed on this deal, right? Because I risked everything. And so he did. He said, Ken, I think in 3 years, you're going to make $100,000. I was like, holy crap. Well, obviously we beat that. But the point was, it was pushing forward. And that's the number one problem that people have. Now, let me look back and know what I know today. I could be way further ahead had I gotten out of my own way. Because even though I felt like, oh, Ken did great, right? He bought this building. I borrowed half the down payment. I mean, I literally did it with no money, no experience. I figured it out. And I thought, now looking back, I'm like, wow, good me. Look at me. But now that I look back, I'm like, man, Ken, you could have done so much more, but you just constantly held yourself back. It's up here. And that's the number one thing I find with people is they hold themselves back. And you do not need to be a rocket scientist. I'd love to say, oh, I'm smarter than everybody else, but I'm not. I'm just not, right? You don't need to be a rocket scientist to figure this out. It's more about learning from somebody who's been there, done that, because why wouldn't you do that? I couldn't, because well, I tried to do it with that attorney. He just gave me a blessing. He didn't really teach me much. But now you have all these opportunities to learn and avoid all the mistakes for the things that you don't even know are there. But I didn't have that back then. So, going back, get out of my own way. I could have been so much further ahead. And anybody that's listening, if you're when you this is happening to you, when you're like, man, I don't even know what that would look like. I can't buy an apartment. I can't buy a $5 million apartment building. Well, you can. And now you just have to change your focus. It's not about, oh, here's a mountain in front of me and I can't get over it. That's not how you got to look at it. You've got to train your brain. Say, okay, this is just a problem. How am I going to solve it? Because that's the real truth. Every time I've had a problem, I said, oh, I'm going to figure this out. Somehow, some way, I'm going to figure it out. And I do that. So that there's a number of things in that answer there, but it's all up here, man. It's shocking to me how much your brain stops
when you talk
you.
about the brain stopping you, it's those negative comments, those negative thoughts, right? Those limiting beliefs. And a great little strategy or tip to help you with that is whenever you have those negative thoughts, especially a negative statement like, I can't buy apartments, I don't have money, change that negative statement into a question. How can I buy an apartment? Because I don't have money, or where can I get the money, right? If you change it to a question, now you allow your brain to start ideating potential solutions. Okay, well, how do I get it? Well, that's right. Maybe that attorney, he was investing in properties. Maybe he's interested in investing if it's a good deal, right? Now you can start to identify solutions. But when you make that statement, you shut the brain off completely. And that is so damaging because it limits the ability to grow, to ideate, to find a solution. And if you can turn that around into a question, it opens up the possibilities. The other thing you said, Ken, that jumped out to me is like, you talked about the guide. You did a lot of research early on. You attended these events and you didn't have that true mentor or coach to help you, but you still got some validation from that attorney, right? And he was a guide. Even though he didn't hold your hand and teach you, you got the blessing that, yeah, man, this looks like a good deal. You're going to make it. You should make $100,000. And that was enough to get you going. Yeah. And we all need that because we're trying to do something that in a lot of times for a lot of people, this is not the norm. Our friends and family are typically not investing in commercial real estate, buying apartment buildings. So you can't just reach out to your buddy and say, hey, man, I'm about to put my life savings into this deal. What do you think? Like, they're going to tell you, you're crazy, run, like, don't do it. So you have to find those people that will help you. And you've got to talk to the right people in the right circles. And sometimes you're not going to get the guiding unless you hire a coach, which is highly recommended. But if not, at least find people who can tell you you're not crazy. Yep, that looks good, man. I think you're going to be in a good spot. And you were able to do that and move forward. Ken, let's kind of progress, right? So that's that person who's maybe in the early phase of their multifamily journey, right? They're trying to get that mastery and they're trying to figure out how to take the first step. You mentioned buying those deals, selling them, and then you left your corporate job to do this full time. Where were you at that point in your journey? Like, what were the challenges that you faced? You've got money in the bank now, but now you got to create a real business, right? A real company and not just, hope to find a deal here or there. This is your primary source of income. So talk to me about some of the challenges that you faced there and how you navigated that.
Yeah, what's interesting about that time, you're right. I had $500,000 at the bank, but $500,000, well, you had some tax to pay. And it's funny how fast.
And it sounds like a lot, right? It sounds like so much money, especially if you were making, 150K or something like that. Half of it bank sounds great, but you're right. Yeah. It can disappear real quick when you start pulling out the pencil.
It does. So now, if I put myself at that point in time, I just sold these deals and I'm ready to leave Deloitte, or I want to leave Deloitte. But now going forward, what's my problem? My problem was I still didn't feel like I had experience. I didn't have a lot of liquidity, and I certainly didn't have much net worth, right? I still had these problems, or I felt like I did. So I'm like, all right, how do I do this? Well, remember how I told you I went to those really boring apartment association meetings? Well, I networked. I was very intentional about, I got to meet these people. They obviously know what they're doing, or they wouldn't be at the front of the room talking to me because somebody thought they were smart. Well, I met a lot of people, but I met one guy in particular. He was an attorney. His name's Gary. Those of you who know me know that you got to find your Gary, right? Well, Gary and I went to lunch a number of times. We developed a relationship of trust. And what I learned about him is a super smart guy. He'd owned about 1,000 units. He was a very successful attorney. He had liquidity, he had net worth, and he had some experience. What he didn't have and didn't want was to do the work. Well, here comes me. I didn't have the things he had, but I had what he wanted. He's like, look, you do all the work. Said, you got to put in a little bit of money. I'm not going to let you do this for free. And he put in most of the money, and we split the profits 50-50. I'm like, oh my God, are you serious? He said, yeah, no, I trust that, we develop trust, right? It's like any relationship, right? It doesn't happen overnight, or it shouldn't. It developed over time, and we've made millions of dollars together doing deals. I did all the work. He did, he provided the other mechanisms that I needed. He was an eviction attorney. He knew everybody in town because everybody has evictions in this world, and they all hired him to do that. So I found my Gary that solved my new problem. And it allowed me to grow. I wouldn't be sitting here having this conversation today without the help of somebody like that. And that is so big because, again, it's interesting the way I wish I would have understood what you just said a few minutes ago. And that was turn that around into a question. And what I was thinking as you said that, that's a brilliant statement, more so probably than because when you have this mountain in front of you, when your brain interprets stuff, right? It either goes fear and flight, right, down south, or it goes north to the reasoning side of your brain. So when I have this fear, when I have this fear of unknown, when I have this mountain, my brain's not thinking logically. By turning that thing around into a question, what did you do? You forced your brain to start now thinking through it logically. All of a sudden, now you can solve the problem. You can't solve the problem when you're scared to death, but you can solve the problem when you can think through it rationally. Well, that's by accident. I'm just being honest. By accident, that's what I did back then, and I solved that problem by finding Gary. I kind of did it. Hey, I got to solve this problem. I need somebody that can lead me to the next level, and that's what I did. That was the next level for me, and for most people, you need to do that even on your first deal, because now, I mean, they're hesitant to do deals with anybody who doesn't have experience, right? You got to have experience in your team. So now you just need to accelerate and find your Gary faster. And so that's what I would encourage somebody that's trying to do what I did. Go find that Gary. There's guys like me. There's probably guys like you. We love helping people, I suspect. Or you wouldn't
Ken,
be on this podcast.
That's just such great advice. And to your point, man, I mean, this, when you get those great statements, like turning a question around, like, I wish I knew that too, right? Like, I didn't know that day one. That was something that came from years of experience, from, trying different things, having a bunch of podcast interviews with guys, and just recognizing, okay, you know what? There is a path. And we talk about that road to mastery. Well, that road to mastery is one that many of us walk down. You may be a little further ahead than some people. I may be a little further ahead than some people. There are people certainly further ahead than I am. But you have to learn from those who are ahead of you on that journey. And what we're talking about is the mindset. And the mindset starts with believing it's possible. Because if you don't believe it's possible, you're not going to take the next step. If you don't think you can buy an apartment building, well, that's it. Chapter's up. What are we here for? Right? Let's move on. Let's go back to work. You're not going to start. You're not going to invest the time, energy, and money necessary to learn how to do it if you don't believe it's actually possible. If you don't think you can make $1 million, if you don't think you can make $100 million. Like, you're not going to take these steps because you've already shut down that this possibility is not real for you. And that's the biggest thing. We can talk about all we want, but it always comes back to, if you see someone else that's done it, you can learn how they did it, what steps did they take, what would they change along their path. And now you can incorporate those lessons to help you on your own journey. You talked about finding your Gary, and you did that very strategically by attending these in-person events, listening to those speakers, and then going out there and connecting with the people. Your guy ended up being Gary, and Gary had a unique problem that you could solve. Gary had the money, Gary had the experience, he had the knowledge, but he didn't have the time. You had all the time and the energy, and you were able to bring that, pair that with Gary, and go out and do deals together and make millions of dollars. I know lots of people would love to find their Gary. It is easier said than done. Can you talk to us about maybe some strategic tips that you would give to others to find their Gary and not a Greg? And no offense to anybody named Greg, by the way, I'm just picking on that. But to find a Gary and not a, not a bust.
Not a bummer. Yeah. So, well, the first thing is you got to understand how people that are the Garys of the world, the people that have some experience, have some money, have some liquidity, you got to understand how they think. And what you have to do is find a way to add value to them. And we teach this in our programs all the time. You've got to figure out what it is you're missing and figure out, stop worrying. Most people start with, okay, if I partner with you, John, what do I get out of it? That's what they do first. That's absolutely the worst way you can approach it, because somebody who has something that you absolutely must have in order to move forward, you're in a pretty weak negotiating position, number one. And number two, the person wants to help you, but now you force them into a situation where they got to defend whatever it is they want. You know what I do with Gary? I say, Gary, whatever you think is fair is fine with me. Whatever you think is fair. He's like, let's just do a 50-50. I'm like, oh, that's more than generous. Now what did I accomplish? He feels good about that, right? And I feel good that I didn't make some demand on him. And all of a sudden I realized this is a decent guy, because he could have said, well, it's 90-10 to his favor, right? He could have said that. He didn't. He said, let's go 50-50 because he's not a pig. He wants to make money and he recognizes it takes a lot of work. So that is number one way to approach that. Number two, how do you add value to those people? Well, those kind of people always have people coming to them saying, hey, I want you to be my Gary, right? They don't say that, but that's basically what they're trying to do. I want you to be my Gary. And the Garys of the world have to say, all right, wait a minute. I got to know that you're not going to let me down. Because the reason they are in that position is because they worked their butts off. They know what it takes to be successful. They did the grind. They did everything. Now they need to know that you're going to be willing to do the same. And it's interesting how so many people don't approach it that way. That if you need your Gary, you need to make him just 100% believe in you. So how do you do that? Number one, show him your work ethic. Number two, you got to learn the business. Take the time to learn the business, because what's the number one way to get somebody to want to work with you? So they got to know that you really know what you're doing. Well, this is a learnable business. It's not hard to learn. There's plenty of places to teach it. We teach it. You probably teach it, John. The point is you can get the technical skills. They just have to see that you're willing to do the grind, to do the detailed underwriting, to visit the properties, to do all the things that are necessary. And when they see someone like that, they'll latch onto you. Why? Because there are so few of us around. That's the truth, right? When I see somebody like that, I'm like, oh my gosh, I need to work with you. I need to work with you because 95% of the people won't do what I see you doing. And that makes me comfortable that I know you're not going to let me down.
Really great insights right there. You talked about a couple of things. One, when you're looking to find that Gary, first of all, you want to add value to them. Don't start with what you get. Start by understanding what they're looking for. And the thing that stood out in your conversation was you let them set the terms. And Gary could have said 90-10 and you would have accepted that. Now, maybe long term, it ends up not being the right partnership if Gary is a little more greedy than you anticipated. But starting out, your point here is don't worry so much about, what you're going to get. Find that right person, let them set the terms. And from there, you're going to expand. And what is that person looking for? What is that potential partner looking for? They want someone who is going to make their life a little bit easier, but someone who knows what they're doing, or at least is eager enough to learn and won't maximize mistakes, but they're also a hard worker.
Yep.
So if you're demonstrating these things, you're out there hustling, you're showing them the work ethic, now it's going to be easier for them to want to work with you because it's going to protect them, protect their money, and ultimately protect their reputation as well. So these are the things that it takes to find these individuals, but you have to be willing to not get as much up front, right? And maybe delay some of that gratification, because as you're gaining the experience and the knowledge, well, maybe you either become that Gary or you don't need Gary anymore in the future. If you're doing deals and now you're scaling, maybe you're making more money, and that's okay too. But starting out, as you're making that transition and really starting to scale, you will need to rely on other people, and you have to be willing to give them favorable terms in order to get some traction in that business. Let's push forward, right? So we kind of talked about where you were in the middle of the journey.
Okay.
Talk about kind of where you're at today, right? So what are you looking at today? How's your business structured? How big is the team? Give us a little bit more context on where you're at.
Yeah, so we've been successful. We're on deal number 20. As the moment we're recording this, we're closing another 23 build in Central Florida next week. So super happy about that. We now have. So let me just give you the progression here. For the first 10 years, we just used our own money, Gary and I, mostly his. Right, that's how we solved that problem. Then I said, hey, I've been around this private equity game at Deloitte for a long time. I understand how it works. We should start raising money. He agreed. And then we started syndicating, right? That means you go find the deal, lock it up, and then go raise the money. Unfortunately, it's a short amount of time you have to do that, but we did that. So we did a few of those. And then, we just did really, really well. Gary and I still have one deal together, by the way, that we still hold. It still does really, really well. But now I'm like, wait a minute. So we do a lot of our deals in Florida, and it's really competitive. So let's pretend like there's 20 offers on a deal, because it happens all the time. How do you differentiate yourself? Because everybody else is syndicating. Well, what if we flip that model around and we raised our money in advance, right? That's called the blind pool fund model. That's where we are now. We're on fund number 6 as I record this. And so now we raise the money in advance, because now when I go to the brokers, the sellers, everybody else, we've already raised the money. I'm going to raise the money. I already did it. I can show you the money is in the bank. Makes you a massively powerful buyer. It just does. So that's where we are now. We've raised to date about $55 million and growing. We've done a couple $100 million in deals, but now what's happening is that the graph, right? It's starting that exponential climb. That's kind of how it just kind of stays flat in the beginning, but when it starts to take off, because people realize, wow, this guy is doing the right deals, right? And he's getting good deals, and what he's doing makes sense. When everybody knows if you show up with money, you go get a better deal. That's just the way the world works. And so we flipped that whole business model around. At first, it was hard. Fund 1 was a little hard to raise because, people aren't used to that. Blind is literally, when you say blind pool fund, they write the check and they give it to you, and they can't say no after that. They give all the discretion to me as the fund manager. So that's where we are now. We're going to continue to grow that. And we also have the educational side of our business, which helps other people now figure out what we've done for 27 years. Because now, like you, I want to go back and help people figure this business out, because it was such a game changer for my life. Man, if I could do that for somebody else, that makes me feel
Ken,
really
I want to go back to those inflection points, right? Because you had a few big inflection points. One was you and Ken kind of used your own money. I'm sorry, you and Ken. You and Gary used your money buying these deals. Yeah. And then you started to go with institutional partners to raise.
No, not necessarily. We raised money retail.
Great point. Great point. Thanks for clarifying. So I know you mentioned that you had the relationships at Deloitte, but you actually syndicated with retail investors. So you use retail investors, and then you flip that paradigm and said, okay, what if we raise the money, do this through this blind fund first? So let's start with that first transition, right? Going from you and Gary's capital to bringing on investors. What sparked that idea? Because it sounds like you were having pretty good success, leveraging your own money and going that route. What was the impetus to say, you know what, why don't we expand this? Let's raise capital. Let's bring investors into this fold.
Yeah, the deal sizes were very small because you have limited capital. That's the thing about real estate, is very capital intensive. I know you know that. And so you need more money. And even wealthy people run out of money eventually, right? And so that's why. That was the impetus. And when I say I had, what I understood at Deloitte about the private equity model was I had a lot of private equity clients. So I won't name them on our podcast, but a lot of very well-known podcast or private equity firms were our client, and I got to see what they did and how they did it. They raised money from institutions. I didn't want to do that because I don't know. Again, my brain probably got in my way. But most importantly, I didn't want someone out. When you get a $10 million check from an institution, they're the boss. I mean, it is what it is. He who writes the check is the boss. And I didn't want that. I wanted to grow my own company. I didn't want someone else deciding when we would sell and do all that stuff. So we stayed away from institutions on purpose. Gary and I syndicated a few deals together. We stopped doing deals together, I don't know, probably 10 years ago, maybe. Just because a little bit of I didn't need him anymore, a little bit because he's retiring. But I just, now I had good traction, right? I just didn't need him, and he wanted to go do stuff with his son. So, I mean, we didn't break up, but we just didn't need to do deals together anymore.
And I think that's so important for people to understand, right? Even though these are partnerships and you got to take them seriously. I mean, these are certainly long-term agreements. We're all individuals and life changes, our priorities change. And, it's different when you were starting off because you were leaving that corporate job and you needed help just solidifying the business. And then fast forward, you don't really need that help anymore. You've got a track record. You've got capital yourself. You're doing the operations. There's other sources of, investor equity. So now you have more room to play, and it's okay for things to evolve over time. Sure. And what I heard you say, and I want to make sure everybody heard you clearly, I don't care how much money you have. At some point, you're going to run out. That's just how investing works, right? You're just never going to want to put all of your money into a deal. If you had a screaming deal and you had $100 million liquid, you probably don't want to put all of that into one deal, right? No, even if you had
never do that.
So you get to a point where it's now not about what you have investing. It's about the opportunities and creating opportunities for other people. Yeah. And that's where raising capital becomes a thing. And you're able to do that with retail investors. I like your rationale on, hey, you know what? Yes, we could go institutional, but I want to go retail. I want to have complete control. This is going to give us a little bit more flexibility on how we do this deal. And that makes a lot of sense. And then as you scale from there, the flip was now to go to the blind pool route. That I know when I speak to other syndicators and operators, it sounds like a great idea. I know some who have done it. I know others who have contemplated it, but not pulled the trigger on it. What concerns and questions did you have when you were considering going to blind pool versus maybe raising capital and doing the syndications the more traditional one-on-one way?
Yeah. So what's happened over my life is everything that we do, every single thing, even we self-manage on the whole property management side, everything we do happens. It's intentional. It's solving a problem. And when I think back to why did I go to the blind pool fund? Because I got tired of differentiation by paying up. I mean, we still did well, but it really sucked paying up. So that, hey, I'll pay more than the other syndicator. And then the other problem was, again, these are real problems that I was trying to solve. Try raising $3 million in 45, 60 days. I mean, that's a lot. I mean, that's serious. All the little gray hairs, most of them came from those times. Okay. I'm just telling you. So I said, I got to do this blind pool fund because I that stress I don't need. And so the first blind pool fund, it was harder because we hadn't done one, right? Some people they will never touch fund one. They just won't. They just will not do it because they know you've got to figure some stuff out. And most of the time it's the bookkeeping and accounting that people don't understand. Well, I was a CPA, so I was cool with that. But it was, it's like everything else. People start to see success. Oh, okay, I see what you've done. I see what you've done. Our track records on our website, we had it fully vetted by Verivest. We had somebody audit it. We just kept stacking up transparency and showing people what we could do. There was a lot going through my mind, but what drove me to this was I knew that if I raised this money in advance, the brokers would take me so much more seriously. I mean, seriously, you tell a broker that you've got $10 million in the bank, please help me deploy that money. They are going to work like dogs. They just will because they know. And now we've been in the market long enough. Our reputation is that we don't jerk people around. We make the deals easy, all that stuff. And ready for this? we tell the broker, if you bring us that deal, unless you somehow find a way to destroy our relationship, you're going to get it on the turn. Think about that. Now, what do you see me doing? Remember what I did with Gary? I was trying to give him what he needed. Now, when I look at the broker world, most people are trying to get and try to negotiate and everything else with sellers and brokers. No, what do you need, Mr. Broker? Let me give you what you need. You want certainty of close. You want a deal that's not going to drive you nuts, right? You don't want me to mistreat your seller. Let me give you those things. And it's all kind of coming from a place of service. But I always believe if you just put yourself in the other guy's shoes and understand what they're trying to accomplish, help them. Because you know what they're going to do? They're going to help you right back. At least that's what I found.
There's a couple things that really jump out. I'm going to work backwards, right? So you talked about the broker and building that relationship. And here's the thing. If you are having a hard time building broker relationships or seeing deal flow, what Ken just laid out is masterful. First and foremost, how do you stand out in the marketplace? Well, you stand out by having the money ready to go. And it's like burning a hole in your pocket, right? Like that's going to make you stand out when you're talking to brokers and saying, hey, I've got 5 million sitting in an account, or I got 10 million sitting in an account. I've got to deploy it. What do you have? And by the way, if you bring me something, you're going to get it on the back end as well. So for a broker who makes their money on commissions when they do a transaction, to basically tell them you're going to get 2 for 1. You're going to get this transaction now. Then you're going to get a chance to turn around and sell it again in 3, 4, 5 years whenever we exit. That's going to be very appealing, right?
Yep.
So that's the thing with the broker. Stand out, be a serious, credible buyer, but also let them know, hey, unless you do something crazy, you got this as a listing when it's time to sell as well, right? So that's the second thing. Yep. The first thing, though, is on the blind pool. It's standing out with the standing out with the brokers. But the other side of that equation is taking care of investors. So talk to me about the trepidation investors had. You mentioned, hey, there's some folks who won't touch that first pool just because they want to see you go through it and learn the things you don't know. I would also imagine that the terms might be a little bit different. So kind of take us into the weeds just a little bit here on, if I invested with you on that last syndication deal when you had 123 Main Street, and now you've got a blind pool, what does that offer look like? How does that differ from maybe that last syndication deal to now this blind investment opportunity?
Yeah, you're insightful, man, because now you just made me remember the number one thing that everybody said to me when I told them I was going to go to the blind pool model. You know what they said? Your syndication investors will never follow you. I said, really? Why? Oh, just because they won't. I said, okay. Well, now you just gave me a challenge. I'm like, and you know what? You're going to make me prove you wrong. So how do I do that? Well, guess what? I'm going to make the terms look exactly like they did when I was syndicating. Mr. Investor, there's no difference. I only changed one thing. And that is that you give me the money up front so that I can go find the deal. That's the only thing I'm changing. Still the same 80-20, still the same fee structure, still the same everything. Everything else is the same. Why? Because I didn't want them to be like, okay, now we're in the blind pool. Here's what things are going to look like. And I changed everything. They're going to be like, I don't like that. That's not what I'm used to. See, I took away all the reasons for them to object to going to that first fund. That's how I solved the problem. It's still a hard raise. I mean, raising money in advance is not easy unless you've got a good track record. And we're 27 years in, we're okay now. But early on, 10 years ago, 15 years ago, it was hard. It was hard. So that's kind of how I dealt with that issue, because that's a real issue. And all through my life, I've always, when I was at Case, all the professors said, "Oh, Ken, you're going to be too old. Nobody will hire you in the accounting world." I said, "Why?" Well, because you're going to graduate at 29 with your master's, and they want 22-year-olds. I'm like, oh, so glad I'm here getting my education. I proved them wrong. I'm like, oh no, now you just made me prove you wrong. Then they said, oh, I wanted to go in the tax. Oh, don't even do that. That's even worse. Now you're doubling up on bad decisions. I'm like, what do you mean? Well, they only hire attorneys for tax. I said, oh, why? And I realized they were wrong, right? So all throughout so now what did that last group of people do? Your syndication investors will never follow you. Where's the theme in this? Don't listen to other people. Rationally think about what you're doing and look for a real reason it won't work, just not because somebody else said it won't, right? What did you talk about earlier? Get rid of those negative people, get rid of those doubters, right? Just get rid of them from your life. I've had to do that all throughout this whole process because it's not going to go away. Everybody's going to tell you you can't do, right? This year we want to buy $250 million worth of real estate. I mean, that's insane, right?
It's all relative, right? I mean, it's all relative. It sounds crazy, but on the same note, like we said, if you turn that into a question, well, how do you do it? Well, there you go. It becomes a little bit easier to find solutions when you do that. And I think that goes back to what you were saying, right? When people tell you something, we want to stay positive and we want to have the right mindset, but typically they're telling you something because it's a hurdle, right? It doesn't mean you can't do it. It just means, hey, there's a real hurdle. There's a hurdle that some of these companies have with hiring older accountants who have their master's degree. And now you just got to turn that hurdle over on his head and say, okay, well, what's the issue here? And then how do I address that issue, right? And that's going to solve so much for you in life. If you can identify those hurdles or obstacles, understand why they're hurdles and obstacles, and then start to creatively find solutions, now you're going to put yourself on that path of success. And I love what you talked about from a blind pool standpoint, because that is a challenge that so many people have, right? It's like, it was different when I could see this property and make a decision on investing in it versus I'm writing the check and I'm making the investment, but I have no idea what the property is. There's got to be a lot of trust in you as the operator to stay true to the kind of properties that you have done up to that point. You've got to have a clear vision, clear execution plan, the clear resources around you. And that makes it a lot easier for investors to get on board. But there's still going to be some trepidation, right? Because you're asking them to trust you and commit without really seeing what that investment opportunity truly is and maybe ask their questions. And that gives people a lot of comfort. So as you build up, certainly you may not raise quite as much as you would if you were doing it as a one-off, but you can start to build that momentum, and that actually gives you more buying power. And it probably is a story to be told that it's actually better for the investors because now it reduces the risk of not maybe closing on a deal, or you have better negotiating power because you have the capital there already. So maybe you can get them better investments than you could if you were to go kind of on the one-on-one basis. So the more you spend time with investors and get them comfortable, the easier it is to make that transition to go from, doing the one-off syndications to a blind pool. If you had someone that you were coaching and they told you, hey, I've been investing for, I don't know, let's call it 5 years as a syndicator. I'm thinking about doing a blind pool. What advice or feedback would you give them before making that final decision?
Yeah. So what I would do, I think the thing that you need to make sure you have is some kind of track record. So what helps us is we've turned 14 of our 20 deals. When I say turned, they've gone full cycle. So I bought them, I ran them, I sold them, and the results of that are on my website. And oh my gosh, we made a lot of money, right? So the more you can do to prove to the investors that you can take it full cycle, the easier it's going to be for you to do that blind pool raise. That's because that's what investors they don't have the building to look at yet. They don't have the numbers to look at yet. They can't underwrite next to you yet. So you got to give them something else. And that is, okay, wait, Ken's done this 5, 10, 15, almost 15 times. Okay, I see what he's done. He did it over and over and over and over. Okay. I mean, there's no guarantees, but I'm getting more comfortable that he might have figured this thing out, right? That's the best advice. So if you're a couple of years in and you haven't sold anything, it might be an uphill climb for you. But again, that doesn't mean you can't. Now you're back to, I love your question. I'm telling you, I'm going to start using this all the time. How do I get myself to the point so I can build a blind pool fund? Okay, well, I have to turn a couple of deals and show profit. Guess what? Then go do that, right? See, I figured out the solution. Or what if you partnered in a joint venture with another blind pool fund guy, right? There's just lots of ways. See, now what we're doing is we're thinking creatively about how to solve that problem.
Absolutely love it, man.
And so that was
Ken, I love it. So you mentioned you've got a new deal that you're working on now. You also have, some education that you do for other folks. If they want to learn more, they can connect with you. Go to your website, the KRIpartners.com, I believe, correct? Yep, KRIpartners.com. Yep, right, we'll make sure we link to that in the show notes. Ken, for our listeners who are on this journey, they're trying to figure out how they take the next step forward on their road to multifamily mastery. What parting words would you give them?
Yeah. If you're new to the game, you've got to dive in and learn the details. So many people, this is crazy. I don't understand why this happens, but I have talked to a lot of successful people, and every successful person tells me that they are successful because they paid attention to the details, because those details are what sets them apart and is the reason for their success. But for some reason in this business, people want there's like in they want the easier, the fast track, right? And maybe it happens, but here's what happens if you don't dive in and legitimately learn what you need to do, when you need to do it, more important, and how, of course, but more importantly, why. See, I know why we do every single thing. And the reason that matters is now you're having an investor discussion. You're talking to a broker. You're talking to a lender. You're talking to a seller. Anybody in this business, if they can see, wow, this guy kind of knows his stuff, trust level goes through the roof, like instantly. So that's the thing that I want you to do. Roll up your sleeves, suck it up for a minute or two, learn the details, the crappy stuff you don't want to do, like learn how to underwrite, figure out the spreadsheets, do all that kind of stuff, because it will elevate you so fast. There's no faster way to elevate yourself. And then the second thing you got to do is just get out of your own way in your mind, right? Surround yourself with people. We do a lot of live events. Surround yourself with people who are doing what you're doing, because they're going to show you and they're going to help support that. Yeah, we're all doing this. This isn't something that can't be done. I mean, we're doing it. The guy next to me is doing it. The guy at the front of the room's doing it. This is real. Like most people that start out in my chair didn't have any money. They didn't have any experience. They had no clue what the hell they were doing, but they figured it out. They went and learned and figured it out. And it's funny because everybody that wants in this business, they always look a lot like I did 27 years ago. And they don't think that problem is solvable. It's in their mind. That problem is solvable. I promise you, I've solved it. And I'm not the only guy that has figured out how to solve it. You can too. Those are my parting words for those people who are trying to figure
absolutely
this out.
Love it. You know, we like to talk about the road to multifamily mastery, and that's exactly what we're talking about. This is about not just building millions in real estate. We want you to know your stuff. I want you to know the business. I want you to know how to think about the business, what to look out for in the business. And that's why I don't want to get into these general rule of thumbs. It's fine for starting out, but the truth of the matter is you kind of have to constantly be evaluating key decisions and understanding when things shift and change. So when you're talking to brokers, you're talking to investors, you understand the deals you're looking at, you're understanding how to stack the capital, you're understanding where there could be challenges, and you are the one that is really leading that deal. Even if you're a passive investor, I want you to develop the mindset where you understand what you're doing and you're moving down this path of multifamily mastery. So you have a lot more control over the decisions you make, the deals you invest in, and ultimately the outcomes you are looking for. Lots of great stuff here, Ken. I appreciate our time and our conversation today. Again, for folks that want to learn more, you can check out kripartners.com. Ken, thanks for joining us here on Multifamily Mastery on the best ever CRE show network. I look forward to staying in touch with you, and I hope you have a great day.